China's relationship with cryptocurrency is a paradox, a dance between embrace and rejection. This intricate dance is not just a fleeting moment but a long-standing performance that has captivated the world. The nation, known for its rapid technological advancements and digital innovation, finds itself at a crossroads, balancing the potential benefits and inherent risks of digital currencies. On one hand, the nation that birthed Alipay and WeChat Pay, pioneers in digital payments, seems a natural fit for the world of blockchain and digital assets. These platforms revolutionized the way transactions are conducted, making cash almost obsolete in urban areas. The seamless integration of digital payments into everyday life showcases China's capability to lead in the fintech space. Yet, China has repeatedly cracked down on cryptocurrency activities, leaving the world guessing about its true intentions. The government's stringent regulations and enforcement actions against illegal mining operations and unregulated exchanges highlight a cautious approach. This duality creates an atmosphere of uncertainty and speculation. This complex relationship, full of contradictions and shrouded in secrecy, has massive implications for the future of finance. The global financial community watches closely, as China's policies could set precedents that influence other nations' approaches to digital currencies. The Chinese government's stance on cryptocurrencies has been anything but consistent. From initial enthusiasm to subsequent crackdowns, the policy shifts reflect a broader struggle to control the narrative and maintain financial stability. Early adoption was met with cautious optimism before evolving into outright bans on trading and mining. These measures were justified by concerns over financial fraud, energy consumption, and capital flight. However, the abrupt policy changes have left many in the industry scrambling to adapt. Yet whispers persist of China quietly amassing a strategic reserve of Bitcoin, a move that could upend the global balance of power in the digital age. Such a strategy, if true, would indicate a long-term vision that contrasts sharply with the public narrative of suppression. This uncertainty keeps investors and governments on edge. The potential for sudden regulatory changes or strategic shifts makes the Chinese market both a tantalizing opportunity and a significant risk. Will China emerge as a crypto superpower, leveraging its technological prowess to shape the future of finance? The country's investment in blockchain technology and digital infrastructure suggests a readiness to lead, but the path forward remains unclear. Or will it double down on control, reinforcing its centralized financial system and rejecting the decentralized ethos of cryptocurrency? The central bank's development of a digital yuan indicates a preference for state-controlled digital currency over decentralized alternatives. The answer, as with many things in China, is likely a complex mix of both. The interplay between control and innovation, tradition and modernity, defines China's approach to cryptocurrency. Understanding China's motivations and potential strategies is crucial for anyone seeking to navigate the future of the global financial system. As the world watches, China's dance with cryptocurrency continues, a performance that could reshape the financial landscape for years to come. To understand China's current position, we must revisit its history of crypto regulations. In 2013, Bitcoin first piqued the interest of Chinese citizens, leading to a surge in trading activity. The government, wary of this decentralized currency operating outside its control, began implementing restrictions. By 2017, China had banned initial coin offerings and ordered cryptocurrency exchanges to cease operations. This crackdown intensified in 2021 with a blanket ban on all cryptocurrency mining, citing environmental concerns and financial risks. The impact was immediate and dramatic, sending shockwaves through the global crypto market. This series of crackdowns painted a picture of China as a staunch opponent of cryptocurrencies. However, beneath the surface, a more nuanced story began to emerge. Even as it clamped down on public crypto activity, China was simultaneously investing heavily in blockchain technology, exploring its potential applications in various sectors. The government's actions seemed contradictory, leaving many to wonder if China was truly rejecting cryptocurrencies or simply seeking greater control over their development and use within its borders. This ambiguity surrounding China's crypto strategy continues to fuel speculation and debate among investors and policymakers worldwide. China's seemingly contradictory stance on cryptocurrency stems from a complex web of motivations. On the surface, it may appear that China is sending mixed signals by embracing blockchain technology, while simultaneously cracking down on cryptocurrencies like Bitcoin. However, a closer examination reveals a strategic approach aimed at balancing innovation with control. One primary concern is maintaining financial stability and control. The Chinese government has always prioritized a stable financial system, and the rise of decentralized cryptocurrencies poses a direct threat to this stability. By allowing individuals to bypass traditional banking systems, cryptocurrencies could potentially undermine the central bank's ability to regulate the economy. Cryptocurrencies, with their decentralized nature and potential to facilitate capital flight, represent a challenge to China's tightly controlled financial system. The government is wary of any technology that could enable large sums of money to leave the country without oversight, which could destabilize the economy and weaken the yuan. Another key factor is environmental protection. China has made significant commitments to reduce its carbon footprint and transition to more sustainable energy sources. The energy-intensive nature of cryptocurrency mining, particularly Bitcoin, stands in stark contrast to these environmental goals. China's previous dominance in Bitcoin mining came at a significant environmental cost, consuming vast amounts of energy and contributing to carbon emissions. The government recognized that continuing to support such activities would be counterproductive to its environmental objectives. The government's crackdown on mining, while impacting the crypto industry, aligned with its broader goals of reducing pollution and achieving carbon neutrality. By shutting down mining operations, China aims to cut down on energy consumption and promote cleaner, more sustainable practices. Beyond these practical considerations lies a deeper ideological dimension. The Chinese government is deeply invested in maintaining control over its financial and technological sectors. This control is seen as essential for national security and social stability. China's embrace of blockchain technology, while simultaneously rejecting cryptocurrencies, reflects its desire to harness the power of innovation while maintaining centralized control. Blockchain offers numerous benefits, such as increased transparency and efficiency, which the government seeks to leverage without the risks associated with decentralized currencies. The government seeks to leverage blockchain for its potential in areas like supply chain management and digital identity, but without ceding control of the financial system. By focusing on these applications, China can modernize its infrastructure and improve efficiency while keeping a tight grip on financial transactions. Understanding these multifaceted motivations is crucial for deciphering China's future actions in the crypto space. The country's approach is not merely about embracing or rejecting cryptocurrencies, it is about strategically navigating the opportunities and challenges they present within the context of China's broader national interests. It is not simply a matter of embracing or rejecting cryptocurrencies, it is about strategically navigating the opportunities and challenges they present within the context of China's broader national interests. By understanding these motivations, we can better anticipate China's future moves in the rapidly evolving world of digital finance. While publicly denouncing cryptocurrencies, whispers persist of a clandestine operation, China quietly accumulating a massive Bitcoin reserve. This notion might seem contradictory at first glance, given the Chinese government's stringent regulations and public stance against decentralized digital currencies. However, beneath the surface, there are intriguing signs that suggest a different story. This theory, while unconfirmed, holds significant weight given China's history of strategic resource acquisition and its ambitions to challenge the US dollar's global dominance. China has always been known for its long-term planning and strategic foresight, often making moves that seem puzzling in the short term, but reveal their true intent over time. Proponents of this theory point to several key events. One of the most notable is the sudden and severe crackdown on cryptocurrency mining and trading within China. This move forced many mining operations to shut down or relocate, causing a significant disruption in the global crypto market. Following the crypto crackdown and the exodus of mining operations from China, Bitcoin's hash rate, a measure of the network's computing power, experienced a significant drop. This drop was a clear indication of the impact of China's policies on the global crypto landscape. However, this drop was temporary, and the hash rate quickly rebounded, suggesting the emergence of new, potentially state-backed mining operations. This rapid recovery raised eyebrows and led to speculation that the Chinese government might be secretly supporting these new operations to build its own Bitcoin reserves. Furthermore, China's central bank, the People's Bank of China, has been aggressively developing its own central bank digital currency, the digital yuan. This initiative is part of a broader strategy to modernize the country's financial system and reduce its reliance on the US dollar. Some analysts believe this digital yuan project is not just about creating a domestic digital payment system, but also about positioning China for a future where cryptocurrencies play a larger role in global finance. By developing a state-controlled digital currency, China could be laying the groundwork for greater influence in the international financial system. If China is indeed accumulating Bitcoin, the implications are profound. Such a move would not only signal a significant shift in the global financial landscape, but also provide China with a powerful tool to exert influence in the crypto market. A significant Bitcoin reserve would grant China leverage in the crypto market, potentially allowing it to influence prices and exert geopolitical pressure. This could be a strategic advantage in a world where digital currencies are becoming increasingly important. It would also represent a strategic hedge against the US dollar, further challenging the existing global financial order. By diversifying its reserves with Bitcoin, China could reduce its vulnerability to US economic policies and sanctions, thereby strengthening its position on the global stage.